Welcome to this month's Market Update. I'm joined today by KC Lowe, Senior Consultant with Frontier Advisors. Thanks for joining us, KC.
Hi, Wayne.
There's certainly been some interesting movements both up and down in markets over the last few weeks. Let's start with a bit of a broad update or overview of markets.
So the Russia-Ukraine war remains the biggest driver of market movements over the last 6 weeks or so. Global equity markets have fallen at the initial bits when Russia invaded Ukraine. But since around mid-March, equity markets have started to recover. And in fact, currently it's around pre-invasion levels right now. And if we look at the regions, Australian equities have actually outperformed most other markets. And in fact, we're sitting above pre-Ukraine invasion levels right now. And the reasoning behind that is Australian equity markets has a much larger exposure to the resource sector, which has benefited from the increase in commodity prices as a result of the war. The other region to touch on is emerging market equities, which has actually underperformed other regions. And the main reason there is because of quite a large decline in Chinese equities.
So what have been some of the factors behind that decline in Chinese equities, KC?
There's quite a number of factors, but the big one of the last 12 months is that the policy environment in China has been tightening over that period, which has had a negative impact on Chinese equities. But most recently, there's a number of factors. The first one is there's been concerns around Chinese stocks listed on US stock exchanges. So a lot of these Chinese tech stocks are listed there. And there's been concerns around those stocks being forced to delist from the US stock exchange. And the other big one is the COVID situation in China has become quite negative over recent weeks. They're experiencing their largest COVID outbreak since pretty much the start of the pandemic, so since March 2020. And as a result of that, a number of cities, particularly the big one, Shanghai, has gone into lockdown because China is still pursuing this zero COVID policy, or what they're calling it now, dynamic zero COVID policy. So that's having an impact on economic activity there. And the reasoning for why they're still focusing on this zero COVID policy is because that the locally made vaccines are not that effective against COVID. So there's quite a number of negative factors that has impact on Chinese equities. But one of the positive offsets that we're keeping an eye on is that after 12 months of policy tightening, it does look like the authorities in China has started to ease policy there. So some of the factors that we keep an eye on in terms of infrastructure, projects and investments, and private credit growth in China, those has started to turn. So some initial signs that things are becoming a bit more positive, at least on the policy side of things.
Well, something else that I know you keep your eye on are central bank announcements. What has come out of the central bank sector that's caught your eye?
So the big one over the last month is the US Federal Reserve. So they've come out and hiked interest rates by 0.25%. So US interest rates are now at 0.25 to 0.5% range. Now this is quite big news because this is the first hike since 2018 for the US Federal Reserve. So, not since pre-pandemic period have they hiked. And the reasoning behind the interest rate increase is because economic growth in the US is quite strong at the moment, albeit this is based on economic data before the Russia-Ukraine war. So we're yet to really see the impact of that flow through to the data yet. So that's one to keep an eye on. The other factor that led to the US Federal Reserve increase interest rates is the concerns over inflation there, which has been accelerating quite a sharp pace there. Locally, if we look at the Reserve Bank of Australia, they didn't hike interest rates, but the key development here is that they did remove wording around being patient with inflation. So it does look like even here, the Reserve Bank of Australia is getting closer to increasing interest rates as well. If we look at market expectations, markets are expecting the cash rate here to be at about 2% by end of this year. So expectations are pretty high right now.
Mm. So very interesting movements and trends that are happening, Casey. Thanks for taking us through those. And thank you for watching this month's Market Update.